Hello there, this is forexbrokers.net, and this is the second video out of 3 videos that deal with contracting triangles. On the previous video we discussed the symmetrical contracting triangle as viewed by the Elliott-Wave theory, and these principles help you analyze a triangle no matter the time frame, no matter the market, no matter the asset. Using the A, B, C, D, E as labeling and the B2D trendline principle, also the ANC trend lines and the apex of the triangle will help you identify symmetrical triangles, symmetrical or horizontal symmetrical triangles that form very often. We even discussed the possibility of the euro-US dollar. This is the euro-US dollar on the 4-hour chart, forming a descending triangle at these levels. And then by the time that it broke lower, it retested the base, and now it is rejected, trading 1762. A descending triangle, or when you trade a contracting triangle always comes with a measured move, and this is the first point to cover in this video. A measured move always reflects or refers to the longest segment in the triangle. So if you trade a symmetrical triangle, the measured move is the longest wave, or wave A. So all you gotta do to find out the minimum distance that the market should travel is to measure the length of the longest segment, this one from here to here. Let's change its color like this, to measure the length of the segment, and then to project it from the end of the triangle. Very careful here, because many traders mistakenly project the measure move. They put the measure move from the end of the B to D trend line, which is wrong. The measure move, which is the longest segment of the triangle, should be projected from the end of the triangle. The triangle doesn't always end at the ANC trend line, but the triangle ends where the E wave ends. The E wave may end in the middle of the triangle, or between the two lines. So you just have to find out where that point is before projecting the measure move to the upside. In this case, this is the correct measure move. How about in the case of this descending triangle? For the descending triangle, what we can do is to measure the length of the longest segment. What's the length of the longest segment? Well, we take the measure move, we find out, so this would be A, B, C, D, E, something like this. So the length of the longest segment will be this one, not from here to here, because if this is A, B, C, D, E, this will be the B wave, the longest segment, and we project it from the end of the triangle. What's a possible end of the triangle? This looks like the end of the E wave. So if we project it from this moment on to the downside, then the measured move, or the minimum distance that the market should travel, would be 1720 as the measured move of a descending triangle. But this rule with applying the longest segment by the time that the triangle breaks is valid for all types of triangles, at least when it comes to contracting triangles. Conservative traders have a rule here. They wait for the market to reach 75% of the measure move before moving the stop loss at break even and booking half of the profits. Why? Sometimes and often the market comes and retests the B2D trend line before reaching the measure move. And sometimes when the market invalidates the pattern, this is why you need a stop loss at the lowest point here or the highest point here. Sometimes when the market invalidates the pattern, then it would reverse strongly in the opposite direction, and you don't want to be caught on the wrong side of the market. So at this point in time, let's assume the euro-US dollar here. If the market reaches, by the time the market reaches 75% of the move, which is 1743, what conservative traders do is they go and book half of the profits, move the stop loss to break even, and then wait for the rest of the measure move. Even more aggressive traders, what they do is they trail the stop. For instance, the euro-US dollar now trades 1762. The stop loss should be at the end of the E wave, somewhere around here. at 1804, and the entry by the time that the market broke here the so-called B2D trend line. B2D trend line broke and retested. So the more the euro US dollar declines, with every candlestick or every couple of candlesticks, bears will lower the stop loss the more that the market declines, trailing the stop, protecting the profits. So this is how you apply the measure move, and keep in mind that the measure move is only the minimum distance that the market will travel. Now this, both descending triangles and symmetrical triangles, but also the same principle applies to ascending triangle. For an ascending triangle, imagine a market that rises, forms a consolidation against the horizontal base before breaking high. So this principle is applied for continuation patterns, but triangles are also reversal patterns. For a triangle to act as a reversal pattern, imagine a move or a market that moves to the upside like this, or to the downside, it doesn't matter, but let's say that it moves to the upside, and then all of a sudden it is rejected, and then with the next move it fails, or maybe even makes a new high, but it tries at the highs, at the marginal high, rejected, forms a bit of a consolidation area, tries again, and then eventually moves low. So whenever you see this three times, this seesaw pattern looking like, this is a contracting triangle. How come? Maybe it's not easy to be identified here, but we can use the same labeling as discussed in the previous video. We can say that this is wave A. We can also say that this is the B wave. This is the C wave, ABC. And then this is the D wave. And finally, this is here, the E wave, that completes the contracting triangle. Now, what to do next? Well, nothing but what we've discussed earlier, the A, B, C, D, E principles. Namely, we take the B to D trend line and we connect the B to D. By the time that the price breaks the B to D trend line, we know that this market reversed. That's the entry to go on the short side in this case. And then we also mark the A and C trend line. Make sure that if the apex makes sense, make sure to mark the apex. In this case, in this arrangement, the apex does not quite make sense for the current price action, because if you project these ones on the right side, the price action is further on the right side, and sometimes the contracting angle is not that aggressive. So the two lines, while contracting, they will meet somewhere way on the right side of the chart. But if you can draw the apex, also draw the apex. By the time that the market broke the B2D trend line, that's a signal to go on the short side. Measure the same principles. Measure the length of the longest segment of the triangle. Projected by the moment that the triangle ended, not by the moment that the triangle broke here, and that would be the minimum distance for the market to travel. You might say, okay, this is not good enough for a risk-reward ratio, because if we go short here, it's already close to the 75%. Yes, but this is a definition of this triangle here for a theoretical purpose. In reality, triangles offer much better risk-reward ratios. With the third part, we will discuss the concept of running triangles, but also what other things to consider for when trading contracting triangles. This is a triangle as a reversal pattern. Bye bye.